Has the Fed created the biggest bubble of all time? As we enter into a new bear market, the nation awaits what Chairman Jerome Powell and the Fed's next move is. The stock market has not been a good place to be since the start of the year, as the economy looks to be slowing down once again. What was once one of the hottest bull markets in history, fueled by our central bank, is now struggling to find any green. From pumping unearthly amounts of money into a free market, the shares of public companies rose to heights never seen before. Everything seemed great for a while, but could the prosperity last? Where did all the money go? There are so many unanswered questions and fears regarding the nation's central bank and their budgetary plan and its impact on global financial markets. These questions led to fear as economists and investors wonder if the Fed has created the biggest bubble in history. The Federal Reserve holds all of the financial power in the United States and arguably the world. Here's how the Fed can decide the fate of the global financial markets. Right now, we're doing a major discount on our private trading Discord. Inside of the group, our analysts share their trade signals with a full breakdown of entries, exits, and the reasoning behind their trade. Additionally, you'll be able to chat with other A1 Trading members, and you'll be supporting our content. In order to take advantage of this significant discount, use code A1YT when checking out with the link in the description below. We look forward to seeing you inside of the group. When we think of the stock market today, several words come to mind: bubbles, crashes, overnight millionaires, the Wolf of Wall Street, the Big Short, pump and dumps, FOMO, and so on. Social media has allowed for a community to form around financial markets. As funny as it sounds, it has minted people millions, but it has also taken that away. Everyone has easy access to markets now that it is no longer something that was only limited to big institutions and wealthy people to dip their toes in. Everyone is chasing the quick and easy money that lies in the markets. Now, the little guy can put some skin in the game. But what does this have anything to do with the Fed and how they caused the market to crash? Has the market even crashed? There always seems to be a storm coming of unprecedented calamity that will shatter foundations and reshape the mold in which we've grown accustomed to. Are we just blowing whistles crying for wolf in an empty field? Or are we actually in store for something that has been coming for a long time, something which we've never seen the likes of before? With each passing bear market, we have labeled them worse than the predecessors. The dot-com bubble was bad, but not as bad as the 2008 housing crisis. 2008 was scary, but the March crash of 2020 was far scarier. And nothing is as terrifying as the crisis that looms while the mere thought of it pressures people out of the market before it can even show up. Since then, we thought the world went through the biggest financial crisis of the decade, but we were wrong. This looming fear becomes incredibly frightening once big banks and funds are not the majority participants. They are the ones with the most money and influence, but average people too are at risk of losing it all. Not that they weren't before, but anyone with a social security card, ID, and $1 in cash can start funding their investment journey. People with no knowledge whatsoever on how the financial market works will pour their savings into a digital coin popularized by a cute dog, or a meme about a company will spark enough interest in that company that their stock gets short squeezed, and institutions go along with this, covering their positions while making a quick profit in the meantime. Jerome Powell has Twitter. Presidents have Twitter. Billionaires have Twitter. One tweet sends markets into a frenzy. People get in early, others jump on too late. Crazy swings are normal and bubbles are always inflating. The market is no longer a playground for the rich. It is a conglomerate of ideas, communities, and people where anything is possible. We are one post from frenzy, one shift from sell, one click from crisis. One industry pops and another inflates. We solve one problem by producing another. A bubble collides with another and doubles in size, but the bottle runs out of juice, and from there, it's only a matter of time. Up until the 2000s, stock market investing was often a long and steady investment process. It was a place where one would be told to hold on to a few blue chips and mutual funds when you enter the workforce. There will be some ups and downs along the way, but by the time you're 60, you'll be able to cash out with a nice dividend and a sense of security. It's the summer of 2022. The markets are turbulent. The Nasdaq went as low as 30% off the highs year to date, as the value of major tech stocks were slashed on poor guidance and weak earnings. Putin's war with Ukraine has yet to subside, putting a halt on oil production and driving gas prices through the roof. The tapering process ended. This means the asset purchases from the $1 trillion federal budget has stopped. Wind the clock back 2 years. The world was struck with a pandemic that shocked markets and people all around the world. It was not just another economic crisis, but a global health one as well. Political authorities and policymakers had to act quickly. Governments went to shut down their country's operations entirely, encouraging and sometimes enforcing its citizens to stay indoors until health officials could figure out what they were dealing with. For a brief period of time, the world fell into chaos. Large corporations and small investors alike looked to the Federal Reserve for help. Mom and pop shops were the first to go, while workplaces had to let go of even their long-standing employees. America saw the largest amount of layoffs it had seen in the last decade. Millions of Americans were delinquent on their rent and mortgage payments, which prompted the government to allow for a certain amount of time to hold off evictions for the time being. This grace period, however, would eventually expire. Americans needed a glimmer of hope and time was running out. In March of 2020, Fed Chairman Jerome Powell announced a new monetary plan to keep the economy afloat and businesses moving. If they could provide a financial backbone sturdy enough to have Americans standing upright again, it would be no easy feat. But as the nation's money curators, their plan was simple: print money. The Fed printed tens of trillions of dollars to become the backbone of the country's financial system. They came in to buy treasury bonds, corporate bonds, and even individual stocks. Anything to bolster the financial system and raise sentiment regardless of layoffs and missing earnings. As the price of bonds went up, yields fell. Mortgage rates hit record lows and a record number of houses were sold. Businesses were borrowing money with ease. They were the first ones to do this, which prompted other countries to do the same. The stock market exploded really quickly, but it didn't stop there. Investing became excessively easy as even the most speculative of stocks saw exponential returns. Everyone wanted to talk about investing, and certain online communities started to gain serious traction. Users posted their accounts, making thousands of % returns while others weren't so lucky. These communities eventually received national attention due to their influence on the markets. The Fed made treasuries and the US dollar so unattractive that it gave investors only one choice, which was to put money in the stock market. From the March 23rd lows of 2020, the S&P rose over 120% to all-time highs by the end of 2021. The Nasdaq soared 150% from the lows in under 2 years as well. The Fed had created the biggest bull market in all of history. Wall Street praised them for this, but others had something else to say.
It's a hurricane. Right now it's kind of sunny, things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy or Sandy or Andrew or something like that. And you better brace yourself.
What tends to happen is if you have a boom that goes on for too long, you get misallocation of capital. It starts raining money on fools, basically. It's like any dumb thing gets money, and I'm sure you've seen a few of those. At some point, it gets just out of control, and you just have a misallocation of human capital, where people are doing things that are silly and not useful to their fellow human beings. Make sure you're not running things too close to the edge from a capital standpoint, that you've got some capital reserves to last through irrational times. But I think we probably are in a recession, and that recession will get worse.
When you have mega bulls like Jamie Dimon and Elon Musk coming out to say that this market is in trouble, you know we're in trouble. It seems that not everyone was happy with the central bank's aggressive move, although it created one of the most preposterous times in investing history. The rigorous agenda towards expansion would eventually turn into one of extreme hawkishness. The tremendous growth in equities was matched by the rate of inflation. The more money that was printed, the higher CPI numbers came in. At the start of 2022, the tapering process began, and the federal budget shrank with each passing month. By March, the well ran dry. Praise quickly turned into criticism. Concerns over whether the Fed overstepped its bounds or not came into question. The largest amount of US dollars the nation had ever seen in such a short amount of time caused a massive overflow of supply. Could the Fed be able to quell pressures of inflation, or will consumers be left holding the bag when it's all said and done?